And we continue on through this Crop Progress Tuesday here, 15 minutes to the top of the hour. Mark Oppel, thanks for joining us. Let's go to, before we get to futures here, kind of a broad brush look at several different crops as far as the ratings are concerned. We include corn, and for the first time, soybeans have been looked at by USDA. Let's go to the numbers here and take a look at corn, and then we're looking at and focusing on that good to excellent category in each case here. Those of you tuning in on Rural Radio. Corn at 67% rated good to excellent. That is a 1% decline from last week. Many traders were looking for maybe 2%. Soybeans, first look of the season, lowest first rating of the season since 2013, not that long ago. 66% rated good to excellent. Cotton 66, grain sorghum at 67, no change there, and rice at 68%. Let's go to Chicago, check in with our good friend Todd Horwitz, Bubba Trading. It's bubbatrading.com. Todd, looking at the market, trying to rebound a little bit from all that decline we saw yesterday.
Mark Oppel rated 99 to 100% good. What can I tell you? You know, natural action, Mark. I don't think there's anything really to get overly excited about, and I don't think there's anything to really get upset about here. I think we're just kind of in this churning mode. Had a nice breakout, especially in corn. You know, we got the 409, and then we're now looking at 390, 395 in December is a great spot to step back in again. I think we're going, again, I do believe we're going higher. I think that, you know, no matter what comes out, we're going to find ways to move our way higher here, and I think you're seeing all of that change starting to come, because I think every time we see a little bit of a sell-off, you do see some money flowing in here to buy.
It's simply to say that where $4 was for a time a little bit of a resistance on the upside, that it might now be support as we move forward from here?
It could be. I mean, it's going to be real close, but I think, again, I'm looking for more of like the mid-4s for December corn. So I think we've got a pretty good rally coming, and I think a lot will tie in to, obviously, we've got the Fed report tomorrow, you know, because it'll come down to the dollars as well. And I think the dollar is going to go to 94. I think a lot of money is going to flow out of the equities and create more of a bigger market here as well. So I think for a lot of reasons, for that reason, I think we go higher. And, you know, we look at 4, but I think 390, 395 are great support levels to step in here.
You mentioned that Federal Reserve, I guess a lot of folks leaning off third base that they're going to have a little rate increase. What do you think?
Well, I don't think this will be the worst kept secret in history. I think that's kind of been priced into parts of the market. But one of the things that happens, Mark, especially in futures markets and commodity markets, is they tend to overprice one way or the other. And I think that's where we're at here. I think that they might have overpushed the envelope. So I think we might see a little bit wilder moves in some of the outside markets. But overall, I think it'll be great for the grain space and for farmers and producers.
So a little higher in corn. Let's take a look at soybeans. Todd Horwitz joining us live from the edge of that trading floor. Beans are higher by 8 cents now, 8 cents higher.
Yeah, I think we got to look at November. You know, Novi beans, I think 950 is the key number there. You know, it was 940 in July. It's 950 in Novi. And again, I think we're going to be okay here. But the beans are, as have been my one concern. You know, there's a little bit of trouble there, and there may be some issues with what's going to be produced this year, and that's always the problem. But I think they're going to be fine. I think we're going to be okay here. I still believe that corn and wheat are going to be stronger, but I think soybeans will be fine as well. I'm not looking for that big disaster that many experts are looking for.
7-8 cents higher there. November, as you mentioned, setting to 945.5 as we sit there right now. Looking at the wheat trade, wow, a lot of pressure yesterday, getting most of it all back. Not quite here, Todd, but we are higher in wheat so far.
I look at it, you know I've been a big fan of wheat from the beginning, so, you know, especially with the drying out and all the things that are going on. But in the meantime, I'm still going to say well over $5 in December. And, you know, right now I think 470 is a great level of support. And again, we're starting to see that spread widen between corn and wheat as well. So again, I look across the board. I'm pretty content and pretty happy to own them. My only concern again comes back down to the bean market. But other than that, I think we're going to have a very good season.
Very good. And with that, we say Todd Horwitz joining us and looking at the grain trade here. By the way, 20 cents higher Minneapolis wheat. Those of you tuning in on the radio, following that. We'll take a break, come back, and keep Todd working in the livestock trade here. 100% right here all the time? I'm not sure about that, but let's go back and talk about livestock coming up. 10 minutes to the top of the hour. AgriLiquid, great partners here. If we come back and take a look at the livestock crate, I know Todd Horwitz knows all about AgriLiquid. Todd, St. John's, Michigan. You got to go up there and visit those folks sometime.
I'm going to go visit them, and they get 100% too. Look at that. We're on a roll here.
We're on a roll today. All right, how about that livestock trade here? Cattle, first of all, the beef complex overall trying to rebound from their decline yesterday.
You know, I think that if you look at the fat cattle, I think that they're starting to show some signs that they're going to start to head lower here. And again, I'm not worried. I think that, you know, again, if you're an owner, you shouldn't be like overly concerned. I think that it's gonna be healthier for you in the long run if we see some selling pressure anyways. And I think we're going to see the markets finally start to move a little bit lower. They've been a little bit weaker the last few days. I think you get down, you know, below, you know, probably 117, 115, somewhere around there. I think is a great area to look for higher prices to start coming in again, and I think that'll attract a lot of buying. And I think the next move up will be stronger than this move. And this is pretty strong. So if we can get that, I think you see there. And I think in feeders, they're a little bit stronger, but I think they're going to break below that 150, and I think you look for about 145 there. And again, I'm looking overall. I like everything except I don't like hogs too much, but I know we're still talking about feeders. But feeders are going to be, I think the cattle markets are going to be very strong as the year moves on. I think we're going to have a much bigger year than we think we're going to have.
Very good. So let's talk about the hogs. I'll get the numbers. Those of you tuning in and listening in, make sure I'll get the numbers. We'll cover that. But real quick, your thoughts. You've already indicated you're not too sure about this hog complex.
I think they've had a great run. I mean, again, I'm starting to see, as we see traditionally this time of year, you're starting to see the backwardation start to show up, and we're starting to see the price drop. This is the first time in the last few weeks now that now July is high, and now we're starting to go down from there. And I think that, you know, again, we've had an over big demand here. I think there was a big squeeze here, kind of similar to what I saw in cattle, and I think it's going to eventually start to give up here. And I think if it stays below contract highs, I think we go low, and the next key target to watch is 80, and then probably down to about 75.
Very good, Todd. We're going to get the numbers to our friends and keep in touch. You'll be back with us tomorrow as well here at Market Day Report. We look forward to that.
And on XM 147, that's it. Thanks, Mark.
Yeah, appreciate great work here. Great partner. Todd Horwitz, Bubba Trading, BubbaTrading.com. A great website, information, whether buying or selling, just putting a marketing plan together. All right, as promised, here are the numbers up to the moment. Live quotes from the CME Group here for live cattle, feeder cattle, and hog futures. Live cattle all higher across the board. The August contract up 50 points right now, 122.05, about 50 points or less from their high of the day. October up 42 if you're looking out into the fourth quarter. October cattle at 118.62, up 42. Todd Horwitz, for one, says maybe a little bit more work to work lower, but if we go lower, it gives us more opportunity for a higher trade. And in his words, he's more optimistic longer term in this cattle and hog trade as well. We'll get to hogs in a minute. Feeder cattle futures higher as well right now. In fact, over $1 advance. August up $1, right at $1, 152.5. 152.55. September up $1, 2 points, 152.25. And then looking at the feeder, or the hog futures rather, higher today. June off the board soon, but July and August taking over there. Read this morning that the open interest, that those that are trading whatever side here in the hog trade, they call it the interest, open interest, is the highest since July of last year. So more contracts being traded there. July up $1.75, 82.45, near 82.5. Their high today has been $83. Again, Todd thinking, be careful here. He looks for a turn back lower in the hog complex. August up $1.08 right now, and over 81 right now, 81.05. Janet, we'll keep an eye on that and all the commodities as well moving forward.
Change of pace from what we saw yesterday.
Yeah, exactly. Yeah, well, that's the futures trade for you.
Thank you very much.
You bet. Sure.